Good day everyone, this is Patrick from EasyFX Code Trading System, and this Saturday the 12th of June 2021 is the weekly technical analysis for Euro, Cable and the Aussie dollar for the third week of June. Let's begin with the Euro, and from this fib swing from the highs and lows here, it has reached the 78.6 fib retracement level and has started to pull back lower, back down now to the 62 fib retracement, right near the 121.00. Okay, let's just give you the context so far for the start of the month. And last week it has been consolidating above the 50 fib retracement of the longer term fib, and after attempting to break out higher on Wednesday, trying to break through the 122 and then the 76 fib retracement again, it has been rejected and fell lower right down on Friday, back down to 121. That's where the daily 55 EMA is, and also the 62 fib retracement, right? Key support level here. So this will now be a new resistance zone. And if this support zone is broken, then there is possibility of targeting the 50 fib retracement level. That's at the 120.27 area, and then a key support zone at the 120 round figure below that as well. Right, but we're not sure whether it's able to break down further or just consolidate for next week, and with the resistance now at the monthly pivot and the 50 fib area. That's at the 121.67. So monthly pivot is 121.60. So this zone here is a key resistance zone. All right, let me just adjust this zone here a bit clearer. All right, it's a very narrow zone for now. It's only a 67 pip zone, or to the lows about 70 pips. And it also looks as if there's a bearish channel that's being formed here. All right. So it could attempt to retest the monthly pivot and the resistance zone. And if it fails, then it's going to be a significant rejection here. And then that's where it could target the next fib area at 50 fib. Right, this week there's no Eurozone economic news, but it is exposed to Wednesday's FOMC rate decisions and monetary policy decisions. So that's going to be a fundamental trigger and driver as well. Right. So last week there was after the Thursday's ECB decisions, there was a gap down on the Friday, which continued further down to the support zone. Let's also take a look at the 4-hour time frame to see what happened during the ECB policy decisions here. And initially, this was on the Thursday. And initially, the reaction was weaker, but then it managed to bounce back up after the press conference and attempted to continue higher, but then was rejected at these recent highs and fell hard on Friday. So at the same time as the ECB press conference at 8:30 US Eastern Time, the US CPI figure was released, and that was stronger than expected, and that triggered the reaction here as well, more so than the ECB policies. So the US dollar initially weakened. That's why the euro dollar bounced. And then after that, the US dollar recovered again on the Friday, and that triggered the fall of the other major pairs. And that's also, we'll take a look at the US dollar index, DXY, to see what happened there as well. Okay, let's take a quick look at the DXY. And it has managed to find support, keep finding support at a 162 fib extension. And then on Friday, it recovered. It didn't have much impact on the Thursday for the CPI figure, although it was attempting to climb high but was rejected, and managed to do so on the Friday and climb up all the way back up to the 138 fib extension and also the daily 55 EMA. So there's a glimmer of hope for the US dollar, where next week it could attempt to break out higher. We'll see whether it's able to do that or whether it's still going to consolidate. But for now, it has rising lows and attempting to break out from this ascending triangle here. And the FOMC meeting could be, and decisions could be the key driver there. So watch out for Wednesday afternoon in the US. Okay. Let's move on to the cable. And the cable continued in a ranging fashion here. Support from the 141 round figure and the monthly pivot on the Thursday. That's at the 140.80 area, and it could not go much higher above the weekly pivot for last week. And it's just below the 142 at a high of only 141.90. On Friday as well, 141.86. So it's been constrained under the 142 area. So it's been ranging for quite a while now, since the second half of last month. So it has not been able to break out higher, but it has been sliding lower, perhaps slightly lower highs now, but mainly ranging, and the key support is still going to be at the monthly pivot. So now after Friday's drop, we'll see whether it's able to recover and continue its range, or whether it's going to try to break through, targeting the daily 55 EMA that's coming up. And next week is jobs report and retail sales, but on Wednesday is also exposed to the FOMC meeting and decisions. Right, so we'll need to watch out whether there's any weakness here. If it does fall lower, there's clearly support from the daily 55 EMA, probably just around the 140.30 area. And below that, it's a critical support level at a 140 that has been key level for both resistance and now support. Okay. So let's also take a quick look on the forward time frame to see how it reacted to the US CPI data. So this was the trigger for the move up, and found support from the monthly pivot and the 4-hour 200 EMA. That was Thursday afternoon. So climb all the way back up, and then on Friday, reverse the retrace the whole move, almost the whole move, and back down to 141 support. So we'll see if its lower highs will have any impact on the next week's range and move. All right, let's move on to the Aussie dollar. And there was no major news last week, so it's basically exposed to the US dollar movement, and you can tell that it was ranging for most of the week, with resistance at the monthly pivot at 0.7766, and support was at the daily 55 EMA until Friday, where it broke down and fell to the 0.77 round figure level, right, which is also we were trying to identify the neckline of a potential complex head and shoulders here. And if this is a neckline, needs to did break below and then tried to climb up to test the left shoulder, right shoulder, but didn't quite get there, so which is good. So the complex head and shoulders is still in play, and if this breaks through the neckline again, then the target will be at the 200 fib extension. That's double the move of this height of the neckline to the head. And let's just take a quick look where that is. That's just above, it's at 0.7511. So we'll see whether this will continue its bearish momentum and continue lower. All right. And this coming week, there's the monetary policy minutes on Tuesday, and then Thursday, there's the Australian jobs report. So those will provide some key fundamental drivers, as well as Wednesday, there's the FOMC decision. So that will also add fuel to it. But which means that the US dollar will have to continue higher so that the other major pairs will retrace lower. Let's change this to a lighter. Okay, so it's at the neckline here at 77. And we'll see whether it's going to extend lower next week, and perhaps target 0.76 first, next key round figure, where there's some support here before. All right, and there's also intermediate support here at the 0.7650 area. Okay, so a critical week next week with the FOMC meeting and then the policy decisions. And have a safe week, and do check out my other videos on the spot gold and dollar yen, and have a good trading week, and cheers for now.